What can you tell us about real estate investment financing for the properties that we offer on realestateio.com?
Sure. There's a lot of false thought when it comes to when it comes to financing investment properties. People are hearing out there that there's no financing available.
Right.
We have financed several investors throughout these last 12 months that didn't think they could even get financing. So that there is financing available for investors. Banks are loaning on real estate. It is more challenging now than it was in '05, when everybody could get a loan if they had a pulse and a bank account and had a social security number. So it's much more challenging, but there are banks still loaning money on investment properties. We do have great programs on some properties that if people cannot get financing on through a bank, then they can finance through private channels, through seller financing.
Okay.
Now, something to keep in mind with seller financing, you pay a little bit higher interest rate, but the properties are still cash flowing beautifully. So again, it's how you buy the property, the price you buy them. The interest rate could vary, but it's the cash flow and your return on your investment. In '05, a 10% return on investment was unheard of. Now even with owner terms, you can get greater than a 10% return, much greater than a 10% return. And so don't let that the higher interest from owner financing throw you off too much. And the other thing to keep in mind when you're working with owner financing, the seller, the owner, is taking a huge risk. Most people, when they sell a property, they don't want anything to do with it. They want to wash their hands clean of the property.
Right.
But when you have a seller offering financing, something to understand is that those properties are pretty darn good properties because they're taking the risk of default, the borrower defaulting and foreclosing on that property. That means they'd have to take the property back. And in my world, that is, that's a gem of a property. If the seller's offering terms like that, they're willing to take that risk, and that property's got to be in a good area for them to want to have it back. So it's a risk that they're taking, and a risk that a buyer needs to take a look at. For if it's a risk for the seller, it's good for the buyer.
Now, Jeff, from what you've seen for seller financing, how much down do they usually ask for?
Oh, we've seen it anywhere from about 30, but the average is about 50% down. And we've seen interest rates anywhere from 7% to about 12%. Average being, around 8%. And again, an investor shouldn't let that, I could go. A bank's offering 4. Why would I pay 8? Well, again, you may not qualify for the 4% of the bank, but you're still able to buy at 8% interest rate through an owner, and it's probably still cash flow $300 a month. That's a darn good investment. It's going to be even a better investment a few years down the road when you can go to a bank and refinance.
Right.
Even greater cash flow.
Exactly.